Welcome back. The market continues to hold on to gains of about 0.5%. So let's get chatting about individual stocks. One of them, which was buzzing in yesterday's trading session, was Lumax Auto. In focus today as well, the company is set to acquire 75% stake in interior systems and component supplier IAC International Automotive. Anmol Jain, who is the managing director of Lumax Auto Tech, joins in to tell us more about the acquisition. Thanks a lot, Mr. Jain, for joining in. Seems like the street is pretty excited about the prospects of this acquisition, primarily just going by the way the stock market reacted to this deal that you announced. Just wanted a couple of details. Is this business, the company that you acquired, an entirely debt-free net cash company? And secondly, what is the upselling opportunity or cross-selling opportunity that you have with this acquisition?
So good morning, Mangalam. Thank you for having me. So number one, we're super excited about this opportunity. It is a net cash company. There is no debt on this company except for minor working capital. Also, there are a lot of synergies. I think we have always looked at inorganic opportunities to grow on our core competencies of plastic injection, painting, and assembly. And I think there is a lot of synergies in terms of product cross-selling. Lumax Auto Technologies currently does a lot of products for the interior systems, be it the gear shifter systems or the power window switches and multiple others. I think it gives us to move up the value chain. We will be able to now not just integrate highly on the interior, but also sell a lot of our products as a system, as an entire module to the OEMs. So we're super excited about it. And of course, apart from just cross-selling to customers, we will also be able to add new customers to IAC's portfolio going forward.
All right. Hi, Anmol. Thanks so much for joining in. Well, I want to understand the funding. It's roughly around 600 crore acquisition. You said it's going to be a mix of debt as well as internal accruals. So split that up for us. How much of that will be debt? And also, you're buying 75% right now. Is there an option that you buy the 25% at a later date? If yes, how much do you pay for that?
Morning, Nigel. So number one, yes, it's a mix of debt and internal accruals. Approximately 15 to 20% of it would be internal accruals and rest would be funded through debt. The details of that are still being worked out. In terms of the, you talked about 75-25. Lumax has always been about partnerships. And I think Lumax is not an organization which goes into inorganic opportunities and turns things around. I think we believe in partnerships. We believe in the Indian market automotive market and the growth story. So for us, it was very important for continuity and sustainability of the IAC India operations. And hence we took a majority stake at 75. The 25 will remain with IAC Global. As I said before, nothing changes. It's business as usual. Technology support will continue to the IAC India business. And I think, we see a lot of synergies which both of us can bring on the table, and we will expand from there. In terms of the 25,
you'll not buy the remaining 25% as of now. You intend that they hold on to 25% and you'll work with 75% because you believe you'll want to work together.
That's correct.
And maybe at a later date, you'll look at buying the 25% out?
Well, no plans as of now. We'll cross the bridge when we get to that. But as of now, we want to continue with partnership.
All right. Could you give us a sense of what, the capacity utilization of IAC plants are right now? I mean, what is the peak revenue that this business can do for you? Will you have to make further investments?
So, Mangalam, I would not be having an exact details yet because, right now still the transaction is yet to be closed. I will be able to divulge more details as, once we are in the driving seat. But clearly, I think it's not a very capital-intensive model. I think if you look at asset turns, historically, they have been pretty healthy, much better than, let's say, what Lumax Auto Technologies has been doing in the past. Lumax Auto Tech is about 2.5, 2.7. This is typically much higher than that. So I think we don't envisage a huge capital investment going forward. But I'm not sure exactly what the capacity utilizations are, but there is definitely an upside on the installed capacities.
What's the gross block of the asset that you've acquired?
The total capital employed is about 200 crores.
200 crores. And the asset turns you said was much higher than the 2.5 that you guys would do. So I presume that even if it's around 3, 4, closer to 5, could you give us a range?
Well, I think it's above 3 for sure. It's above 3 for sure. And again, there have been certain recent investments in certain plant capacities which have not been fully utilized. So certain plants could be still sitting on idle capacities as we speak.
Anmol, but I think it'll be closer to the upper end because you're currently going at a run rate, the acquired business, by the end of this year, just going by the run rate that you're on, should at least end at around 620 crores approximately, 600, 620 crores very, very approximately. And it's doing margins of close to around 15% approximately. So let's just try to add the numbers together. You'll have a vision, say, for 2025, once this asset comes on and your core business grows as well. You're moving at a run rate of close to around 500 crores per quarter in your currently, the current business that you run. Plus, you'll be getting this business in, which is doing roughly around 600, 650 crores odd. By 2025, would it be fair to assume that you're in that vicinity of around 3,300 to around 3,500 crores of revenues? And margins, the acquired business has better margins. So do you think the blended margins could be in that vicinity of around 13% odd?
So absolutely, Nigel. I think, Lumax Auto Technologies by itself had very ambitious growth plans. I think, here specifically, we had a huge growth, not just on the recent joint ventures, but also aftermarket, which is an integral part of Lumax Auto Technologies. I think it has shown, a very healthy growth, and that will continue. That will continue even up to 2025 and beyond. But I think giving you a sense of number, it's too early, but I would be very bullish. Post this acquisition to 2025, the numbers you mentioned don't seem not doable. I would say that perhaps if the industry momentum continues, and we are very bullish on the passenger vehicle segment, and that's a huge shift which you will see post this acquisition, where Lumax Auto Technologies at a consolidated level will have a large presence and play in the passenger vehicle and SUV segment.
So,
which is
just to reiterate, Anmol, around 3,500 crores approximately at current reckoning, with margins of around 13% is on the cards. Things could change. You could have some supply disruption, maybe demand gets affected. But by 2025, at least 3,500 crores with 13% margins doable?
I certainly hope so. But
all right.
Operating margin, yes, I've always maintained team EBITDA margins is what we wish to envisage, wish to achieve at Lumax Auto Tech.
Well, that's what your shareholders would hope so as well. Anmol, what does this do to your current composition of revenue? I mean, your long-term goal is 1/3 PVs, 1/3 two-wheelers and three-wheelers, and the other 1/3 coming in from commercial vehicles as well as aftermarket. Now, if I look at Lumax, nearly a quarter comes from two-wheelers, 90% of your plastic business comes in from two-wheelers, whereas the acquired asset has 87% of its revenues coming in from passenger vehicles. So how long before you get to your desired revenue composition of a third, and third?
I think post this acquisition, we would be very, very close to that. I think passenger vehicle segment would pretty much pan out to be about 1/3. And two-wheeler, even though it will continue to grow in absolute amount, as a percentage, I think it would be ballpark around the similar pie, 1/3. And the rest aftermarket, as we go along, will continue to add value. So I think we will be pretty close to our midterm, long-term plan. And again, we will continue to build on that.
Right. Just a couple of quick ones before we let you go. Anmol, you had an enabling resolution to raise 400 crores in August is when the board took that. So is there a chance that you will raise that via equity to fund this, or will that be debt itself?
It will be mostly debt.
It will be mostly debt. And your aftermarket, it's currently about 100 crore quarterly run rate. You said that would double in a couple of years. Could you give us a sense of what are you looking at in the near future?
So aftermarket, I had mentioned earlier, in 3 to 4 years, we expect to double it. You're absolutely right. The run rate is around 80 to 100 crores a quarter currently, and we are on track in terms of adding new products to double that segment in the next, let's say, 3 years.
And the acquired asset has some aftermarket sales?
This one does not necessarily. This one is a more of an OEM play.
All right, Anmol. Thank you so much for joining in, giving us all those details. Wish you good luck with this acquisition. And like you said, 3,300 to 3,500 crores not off the cards by FY25. We will monitor that. Take a short break, come back, get you more on the markets and individual stocks. Stay tuned.